Ladies and gentlemen, welcome to the Big Tech Frenzy. In today's show, I want to talk to you guys about SoFi, about a couple of other stocks as well, but 'twas the night before SoFi, as well as PayPal and United Health as well, P&G, if you're interested in these types of names as well. But for me, I'm really interested in SoFi. Obviously, we are going to be live for a very long period tomorrow, going through, what the actual press release says, what the presentation has to say, what Noto has to say, breaking it all down with a massive group. So I'm expecting a ton of people that are actually going to show up, not just for the crew, but also from a viewership standpoint. So it's always a great time. It's like Christmas 4 times a year. But I am... Tanner got a haircut. No, I absolutely did not. No, I didn't. But just sort of, I don't know, not doing anything with it. So that's it. Also, Dookie, how is everyone a member due to you, but you're not a member on the chat? Literally like 200 or 250 people in this chat is not a member. Is a member, but you are not. I didn't even think that could be a thing. Where is my Lambo? It's 9 a.m. here. Good morning. Yeah, so it'll be pretty interesting how SoFi releases their earnings for you a little bit later. I wish it was like for the morning for everyone. That way we could get like leaked how it is for people that are on the other side of the world. But Tanner, I anticipate a triple beat and Wall Street will still probably crash the stock. At what price would SoFi have to sink for you to start buying again? It's not about that. It's not that there's a price that I feel comfortable buying SoFi. It really has to do with what they're going to put out. So if they end up showing unbelievable results, like what potentially Chris Hager, Data Driven Investing, is expecting. He's expecting $457 million from lending. Roy's expecting like, what was it, 370 million, something like this from financial services. If those two things together come true, I will pay a lot of money, $25 a share for SoFi, and if they continue to push guidance, so it's really not about that. It's just about the multiple on the stock and then what commentary is for the future of the business, right? So if they say that the migration is going to be accelerating the product releases that they end up putting out, the loan platform business is at all-time high demands. We expect acceleration in the loan platform business, landing deals with BlackRock and all of these things. These are massive, total addressable market expanders, or at least capturing on that total addressable market how big SoFi might be within those markets. But it's really just about what they end up talking about, especially because SoFi has so many outstanding shares that if you just look at it from an EPS perspective, not just net income, the range that Wall Street is saying is anywhere between like 5 cents of EPS and 8 cents of EPS. That's a huge spread. And I think that it's mainly because Wall Street, one, there's not a lot of analysts covering the stock, and then two, they don't fully understand the stock in general. So I just find that if they do end up coming out 8 cents, something like this, that would blow a lot of their expectations away. And they would have a harder time trying to sell a bear case of, fair value accounting and, just all these things that they're assuming that SoFi is going to have to slow down, raise capital. That was another one. If they can prove that, no, actually, that's not what they need to do at all, the loan platform business is going to take care of that, then I'm going to pay a much higher price for SoFi. Like I think I was listening to Amit earlier today, and he was talking about can SoFi be like a Robinhood and grow to $80 a share or something like this? But Robinhood back at 7, if you were to ask, hey, could it go from 7 to $100 a share? The answer was a screaming absolutely not. Like there were parts where they were growing either by single digits or low double digits. Well, starting to get through a little bit of their cash, and they didn't really have a direction that they wanted to go in during 2022. There was brand damage. There was all these sort of problems that they got themselves into that, changed what people thought would be the ultimate bull case. And then that all turned around. Then they got, growth above 100% year over year. Like, not many people were expecting that at all. Not even the most bullish, like Amit, was expecting them to be doubling the company year over year, getting, their, what do you call it? Their rule of 40 to 111%. Like, that's insanely fast growth. But then on top of that, also really healthy margins. That's all SoFi needs to do. You reaccelerate growth. You tell investors that you believe that you can hold that up and that you're going to be able to do that at higher and higher margins. The stock will have an explosive rise. Okay. So one of the things that Wall Street has been torn on is, what is SoFi expecting for 2026? And hopefully we get more commentary about this. I think one of the things that could really almost guarantee that SoFi ends up higher tomorrow is if they don't reaffirm 2026 guidance, but they raise it. Okay. If they end up raising guidance, that will get Wall Street very, very excited. Because if you take a look, SoFi earnings estimates right now, that's 2025. So 2026, they have EPS at 50 cents. 50 cents is not even within the range that SoFi says it's going to come out at. They say 55 to 80 cents is what's expected. SoFi always beats their guidance. There hasn't been a time where they haven't. So Wall Street does not even believe the words that are coming out of SoFi management's mouth. So if they say, hey, actually the new range is now 60 to 85, okay, bump it up by 5 cents. Well, it'll be very hard being an analyst trying to hold it back at 50 cents a share when you were below their expectation, and now the bottom got raised even higher. Now they'll have to ask Anthony Noto and team. There'll be a flurry of questions about that and how they get to those numbers, because that was one of the problems. If you guys listened to the FinTech Friday show last Friday, Data-Driven Investing brought up a memorable point back in Q3 of 2024 before we saw the numbers. So we saw the whole, all the data for the actual quarter, but we didn't see the numbers yet. So there's about a month period between June and July 29th where we were left in the dark, or sorry, Q3, whatever it was back then, September or whatever. But essentially what ended up happening was we were so confused as to how they were expecting 80% year-over-year growth from financial services. No matter which way we cut it, it didn't make any sense. Like, they were expecting unbelievable growth rates like they've never seen before. They were expecting unbelievable, margins or new members or something that was going to lead them to this higher growth rate that we just didn't believe that they could achieve. Because SoFi is such a linear business, it just, in order for them to get to 80% year-over-year by Q3 and Q4, by the because we've already seen the first half of 2024, there was an unbelievable amount of growth that needed to happen. So we're like, how is this possible? And then once they showed off their Q3 numbers, they said, hey, by the way, we started a new product. It's called the Loan Platform Business, and it already has massive multi-billion-dollar customers. And we said, oh my gosh, okay, that makes sense. So that's one of the things where it's like, okay, what is SoFi planning that they have in terms of their guidance that they're not telling us right now? Now, one of the funny things about the guidance that they say right now is that they're not anticipating new products that they haven't announced today. Okay. Now, I don't know if that means they are thinking loan platform and they've announced that, but maybe that's inclusive of student loan platform business or home loan platform business stuff, because those are massive products, but they're not officially released yet. I mean, they could be today. That's the funny thing too, right? Is a lot of the product announcements that we actually learn about from SoFi are during the earnings calls. So, when are we going to find out about the student loan platform business? Maybe we find out about that tomorrow morning. Maybe we find out about many new products that they're either working on or have already released for institutions. See, Robinhood, it's hard to skate by many products that consumers can't see because they're a consumer-facing business. SoFi is a consumer-facing business, but they're also very institutional-facing as well. A lot, and I mean like a high percentage of their revenue is from institutional clientele, meaning that yes, they're signing loans with customers, And you can try to model that out, what the payback period would be, what the defaults would be, but you'd have no idea what the execution level of them selling their loans, the gain on sale margin to other institutions. What percentage of those loans got sold? What types of loans? Was that student loans, home loans, personal loans? So we have to wait on a lot of data from SoFi in order to understand how well they've actually done. So it's actually harder to model out SoFi than it is Robinhood. And that's why I find that it's so fascinating that, like, for example, SoFi, if we take a look at their quarterly really quick, this is going back to here where we take a look at their consensus. So we know that the expectation is as low as 5 cents and as high as 8 cents for EPS, next quarter. Don't worry about the year over year growth. This is just because, we saw it at like 1 cent a year ago. We're newly profitable, but we're consistently profitable. Even if you take a look at what analysts have to say each and every quarter. I got in some argument the other day where someone was saying like, oh, SoFi is not profitable. I'm like, I don't know what you're saying, but they're like, change the argument to say, oh, well, I'm talking about the sustainability of their profitability. Okay. You tell me where we're going to see dips. I mean, this is a very linear business. Once we've kind of hit profitability, we're going to stay there as long as, defaults don't go completely under. Same thing with growth here. Like there's no analysts expecting any sort of drop off or anything like this, which you actually do see in Robinhood because some analysts like to price in potential corrections, crypto winters. You really don't see any of that in SoFi's growth. It's just sort of consistent 20+% growth rates. What's funny is they think like, by Q4, we're actually going to see slower growth than what we're going to see the years after. I mean, come on now. Or the quarters after. But whenever we look at the range of, earnings here, just on revenue, I want to meet the analyst that thinks that we're going to get $790 million in revenue. Where are you pulling this number out of your head? Like, that's below their low end of their guidance. And then the upper bound range, $821 million, is lower than anyone that I've talked to is guiding for. Okay, so I think I'm at 835, if I remember correctly, which places me just above. Okay, if Roy comes in correct and he thinks 870, which I think is, bullish, but he also expects quite a ramp up from the loan platform business. And there is a lot of signs to actually prove that is what we are going to see. You're seeing a lot of activity from Pagaya. That's very good for SoFi. You're seeing a lot of activity from Upstart, especially in terms of their website traffic. So a lot of the traffic that actually reaches Upstart is not organic at all. Most of the time it's paid for, and it's high, like very, very high cost advertisements, because these are people looking for loans. Banks, whenever they're giving away hundreds of thousands of dollars, if not, or even just, $20,000 a loan, the cost of that, customer, if they're going to be a multi-year long customer that's paying you out, 14% or 18% or something like this on a personal loan, you're going to pay a lot of money for that lead, because if they sign with you, you're going to make a fortune. Okay. So whenever you see a lot of website traffic from Upstart, you know that they have a ton of demand. You only know. So this is the greatest part about SoFi as well, and why I'm such a believer in SoFi versus Upstart. And a lot of people may differ with me here, but let me explain why. Both have the ability to go out, find a customer, give them a loan, and sell that off to another institution immediately. They both have loan platform businesses. This is why SoFi's bull case has changed so much since Q3 of 2024, and why we're seeing such a heavy uptake in new investors coming to SoFi is because of this new unlock. Okay. Now imagine what SoFi can build on top of this that's going to even accelerate that even further. Student loans, home loans, new products that we're not even thinking about right now. Not even to mention that they've helped those customers, once they've facilitated a loan for them, to sell those loans for them to re-up with them. Okay, so we're taking the loan platform business, which has essentially doubled SoFi's business, and now we're also, doubling the revenue that we can get from those customers because we've facilitated their own loan sales and re-upped them. That's already happened with Fortress Group and other clients as well. They've already announced that. There's been $1.4 billion worth of loans that they've sold on behalf of their customers, of loans that they've already sold them. That's crazy. That's like Nintendo selling a place where you go to buy cards, like Pokemon cards, and then saying, hey, if you want to bring those back, we'll grade them for you and then help you sell them. What are we talking about, dude? It's incredible. So SoFi, whenever they go to try to acquire new customers, and they're paying for that customer because if they need a ton of loans, just like Upstart is doing, except Upstart has no organic customers coming onto the platform. SoFi's website traffic is a little bit more tricky because there's people coming on for SoFi Relay, SoFi Money, Invest. So you never know whenever there's a large tick up of traffic for what product that they're actually looking for. For Upstart, it's much more clear that it is for a lending product, and so you're going to find some activity there. The next reason why I'm a big believer in SoFi over Upstart is that if a customer comes to Upstart and says, hey, I need a loan, Upstart needs money to give them to that loan. They're not a bank, so they need another institution to offer them that money. Now, they have a lot of those right now, but whenever the macro dries up, the reason why Upstart had just taken an absolute free fall in their stock price, and we can see this here. Let's go back really quick. They ran up to about $400 a share and then absolutely crashed. But this big crash was not really a fault of Upstart's too much, as it was the market drying up to purchase loans. And the banks just said, hey, Upstart, we're actually good right now. We don't need any loans. And that's exactly what happened across every single bank and asset manager that they had. They all just said, hey, we're good right now. We're going to invest in other things. Loans are not really what we want. And that hurt SoFi as well. But SoFi was a bank, so they could just house these loans on their books and just say, all right, we'll wait it out. We'll continue to collect premiums. And as long as we've selected the right customers to begin with, we will have low default rates. And that proved to be true, right? And that's where, if you look back on where Upstart took a massive dive, that's also where SoFi found, prices of $7, $4 at one point, is because there was absolutely zero selling activity for loans. It just completely dried up. All right. Let's go ahead and see what the great and powerful Tevis, the fun of investing channel, has to say about the SoFi stock tomorrow. We'll get his opinion on it right now. I've sent you a link, Tevis. But yeah, I'm insanely bullish on SoFi. They have so much flexibility. And although there's companies like, Upstart that can do well, they don't nearly have the tools that SoFi has. So going back to my original point, SoFi, and I'm willing to buy SoFi at a higher price today if they show tomorrow that they can double down, triple down on this ecosystem of getting customers in for one reason, selling them another way, getting those institutions to come back because the underwriting was so great. That flywheel is insane. Okay. And they can bring up those growth rates to levels that Robinhood has seen, but we don't have evidence that they are capable. Like, obviously the facilities and the tools that they have allow for that type of growth, but then there's also execution, right? There's the right marketing efforts, the right tools, where to go first, how to talk to BlackRock and Fortress Group and Blue Owl to come back. Like there's a lot of actual execution that has to go on. Now, SoFi's done very, very well in hard times. And one of the reasons why I'm so bullish on SoFi is they've had nothing but back-to-back terrible macro environments. Okay. What I love, or what could happen, is that SoFi could do just as well in terms of achieving better than expected results in good times. We just haven't seen, it's been years, right? So that level of growth that we are going to see next quarter, 40+% year-over-year growth rates, could hold strong. And we could be holding a bank that's growing twice as fast as the next fastest bank in the market. But we don't have evidence of that just yet. Now, holding at 7 was a pretty easy buy, but now holding at 21 plus $22 a share is 3 times harder of a bet to make because, well, we're paying 3 times as much. Anyway, let's get the opinions of the great and powerful Tevis whenever he's ready.
Yo.
How you doing?
Good. I don't know what is it with you and this great and powerful shit. You make me sound like a fucking wizard.
Everyone's great and powerful. I mean, plus, I mean, I call you every single day to hear what you're up to, and you motivate me to work harder. I mean, this guy works 20 plus hours a day, almost. I'll give you 19 hours. 19 hours a day. You sleep for 5,
Sure.
and then on the side, you're exercising and everything. I mean, you're an absolute role model. You're the great and powerful Tevis.
Thanks, man. Appreciate that. What are we talking about? Are you talking about selling SoFi? Is that what you're talking about?
Yeah. No, but well, a little bit I am. Are you considering selling or buying more? What do you think that the market is going to actually do tomorrow in terms of like we already know what your predictions are in terms of revenue and EPS. Will that lead to a pump or a dump in the stock?
I mean, I think we've been building some good momentum. I think the stock could absolutely pump. You got to keep in mind as well. I forget who it was that posted it. Somebody posted that the last time they reported earnings was like the DeepSeek crisis, and then the time after that was like the tariff issue on that same week. And this time around, I think we have a Fed decision on Wednesday. So if you actually have some lowering of rates, or you have some news from a macro perspective that could be perceived bullish, like you had with the EU news and also the China tariff pause extension, like, yeah, it could absolutely go up. But at the same time, so that's one side of the argument. The other flip side is that there is a case to be made to say, well, this thing has doubled since their last earnings report. There's going to be a lot baked into the cake for what they expect earnings to be. And it could be a sell the news type of event if it's not as good as, you know, the market is expecting, like it's priced to perfection. Realistically, I think that if SoFi does break that trend of not tanking on earnings day, then that's good for the stock long term. It's bad for my covered call short term. On aggregate, good.
If you have covered calls out right now, I'm a happy man, because it seems like every time you do this with SoFi, you have to roll or end up selling shares.
Yeah. It's actually uncanny, dude. It's like I didn't write covered calls on SoFi for the longest time, and then I was like, you know what? Like I'm just not making any money by holding this name. I'm making money on every other name. The moment that I did, it just did a 2x in like 2 weeks.
Yeah, so, I mean, we appreciate it. I promise you. Yeah. But that is interesting, right? SoFi actually used to show off earnings on Monday, and I actually felt like it was a bad strategy because they kept getting burnt from all the potential poor macro news during the weekend. This weekend actually wasn't too bad. I mean, we had a couple Trump deals. Like, it might have been actually a good time to show off earnings, but it does look like we're in a much better macro environment than we were. If we actually do end up getting a rate cut, that'll seal the deal. Like that'll be insane. Now, I don't think the market's pricing that in at all. I think the last time I checked, it was like 6%. But yeah.
Yeah, we don't have as much short interest as we used to either. Like, I 3%. Think it's died down, you know, completely.
What's it at now?
11, I think, was the last time when I checked. I could be wrong. But
yeah. Okay, well, that's not terrible then.
I remember, you know, way back when it was like as high as 20% at some point.
Yeah. Whenever we were like $11 or $12 a share.
Yeah.
Now that it's continued to rise, they back away. It's funny. It should be a bigger stock to short at these prices, but yeah, we're at 12%.
Yeah,
short interest. But the truth is that the business continues to get better, and like the more that we get diversified revenue streams, more fee for service, more members that are sticky and cross selling into other products, the harder it will be to bet against SoFi.
Yeah, bro, you're really gonna make me wake up at 7 a.m. tomorrow.
6:55. It's lights, camera, action. So yeah, you got to get up earlier than that.
Gotta wake up at like 6:30, get a coffee and like a breakfast bagel or something, and then be on camera. You know what? SoFi is not even like, obviously I'm gonna talk about SoFi. I don't understand how my camera's working because it's literally not plugged in. What the heck? I think it's
What?
connecting over Wi-Fi. Um, that's so weird because my phone's my camera, and I just looked at the cable. I was like, wait a minute. Uh, but SoFi, like obviously, I'm going to be doing the SoFi live stream, but I'm really looking forward to United Healthcare. Um, they extended their earnings call by like 45 minutes, and then it's going to be really interesting to see the turnaround there. Um, but I think the gist of it is like I have a bunch of money on the side that, regardless of what I've been building a bigger Amazon position as well with some of the shares that I sold Tesla. Um, and I bought some more lemonade today. So I think like I'm just preparing myself for things to sell off irrationally. If SoFi decides to be one of those things, then so be it, man. I'm not a stranger to buying SoFi.
So if what you expected, so this is the sort of case that I'll put to you. The
Yeah.
earnings that you expect, bang, 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 the member growth, revenue, EPS, all comes in exactly as you expected.
Yeah.
Where does the stock have to drop in order for you to pick up shares the morning of the report?
I mean, if it drops the morning of the report. Well, so here's the thing, Tanner. I think a lot of it is also going to depend on guidance and what management guides for, because we know they guide conservatively, but there's sort of a duality at play. Management's conservative nature in providing their guidance estimates, but also on the other side of it is loan platform businesses' aggressive growth rate that are at odds with each other. They can't really be so conservative and be like, oh, next quarter we're guiding for 150% year over year growth in financial service. Like, it's just, they're at odds. And so I really want to see what they say. Number one. Number two, I want to see what they say with regards to crypto and what their plan is. Like, what is that window for reintroduction into crypto look like? And what is the depth of that reintroduction going to be? I think it could be through an acquisition later this year, where they want to do like more custodial side of things in addition to just the brokerage, and to be able to use crypto as collateral to, have your own loans, pay off your rent, and I can use crypto, or if I'm applying for a mortgage, I can use my crypto as something, uh, you know, to prove I have assets in the bank. Like that's pretty cool.
Yeah.
So, anyways, like I think guidance largely tells a tale for SoFi simply because the market is so inundated and it's so normalized at this point that they're gonna beat on the top and bottom line. I think for me to buy more shares, granted, I mean, like I think SoFi is what, like 20 something percent of my portfolio, 25% or something. Um, I'm not against buying more shares. I think it would need to fall like under 18, probably. And I don't know, like it could, but I've been selling, like I've had covered calls called away at like 16, 17. Obviously, with tranches that I bought at 11, 12 in my wheeling portfolio, but it's not like SoFi's been down for so long that it feels weird buying it so high. But I totally get that it's like one of those companies that, like, it's just because it was down for so long, for years, unfairly, that it deserves to be down to that level.
Yeah, no, I really feel comfortable at the $20+ range.
Buy it right now.
Well, what I really think is that either cash secured puts through earnings would be something that maybe I should consider, or like if everything goes as planned and the earnings that I suggested, which I was the most bearish out of all of you guys, and by bearish I mean I was above every single analyst by a long shot, but the other people on the panel were some crazy psycho people, so they said that SoFi is going to have the best quarter they've ever put out by a long shot. But if that does happen, and somehow we still get sold off, which I know to investors that sounds crazy, and how could that happen? But it continues to happen to SoFi. There's either one or two things that analysts like to pick apart that are so small and insequential to the rest of the large business that we're end up seeing, like even in Q3 of 2024. The only thing that people should have been focused on was the loan platform business, but yet there were other small aspects like tech growth slowing or something like this that people don't really care about. Like this quarter will probably make as much as the tech platform business in loan platform deals. 3 quarters, 4 quarters after it's launched. That's insane. Everyone keeps talking about the loan or the tech platform, how large it is, but it's like, honestly, guys, the loan platform business is everything. So if it ends up dropping based on hopefully results that I expect, I'll buy anything under 20 again. And maybe I should consider doing cash secured puts, and maybe I'll call you to help me pick out a price and everything.
Yeah, I mean, I don't know, because so the thing you have to keep in mind if you're considering buying SoFi here is, okay, what is your existing position? And Tanner and I come from a place of having single digit cost bases, and that skews our decision somewhat because our positions are fully built out. I mean, I don't know what percentage is it of yours, but for me, it's like a quarter of all my portfolios, first and foremost. Secondly, it's a matter of valuing the business at the results that they're going to report tomorrow, where they are, today as a business, and what their prospects are for future growth. And third, it's relative to all the other deals that are in the market right now. And you can say, well, is SoFi the best steward of my capital? Or is it United Health? Is it Tesla? Is it Amazon? Is it Google? I know you've been buying a bunch of that, Nvidia too. And everybody's
Amazon
going to
today,
make
just bought more Amazon. I bought more Amazon today. I would be much more happy, or much more comfortable, I should say, holding SoFi or buying into SoFi at these levels than I would at UNH, because I don't know anything about the business.
Well,
and
you got to start reading about the business, man.
I never will, because the truth is, like I said, with HIMSS and all the other stuff, I don't care to learn about healthcare. It's a confusing space for me. I'd rather buy what I know. And I know SoFi. We know SoFi more than most. Definitely more than what I think a lot of analysts know.
Oh,
right?
yeah.
So I think if it ended up dropping back into the teens after earnings, I would be a buyer for sure.
Depends on the earnings, but yeah, if it was an earnings that we were expecting, then
like what I'm expecting.
Yeah, of course.
But
I mean,
don't
if it dropped back into the teens, I would welcome that, because then my covered calls are safe, and then I can write more cash secured puts even cheaper. Like, it's just all good things all around.
So you don't let's go back, because I want to put you a little bit in your place here. You said during the FinTech Frenzy show that at the end of the week it was going to close at 1950.
Well, I just took the bottom end of the range, right? You guys were like 23, 24, 22. And I was like, all right, well, I'll take anything under 20.
You could have taken 21 to be at the bottom of the range.
No, but anything under 20. I mean, I'm not going to play prices right with you guys.
Yeah, that's fair. That's fair. So if it does drop to those levels at the end of the week, you're a buyer?
If it drops at 1950, I would close my covered calls in the profit. And I would probably write some cash secured puts for like $18, like a $1 or $1.50 under wherever it's trading, about a month out. That's probably what I would do.
Got you.
Because generally speaking, whenever SoFi has pulled back on earnings day or earnings week, it's recovered fairly quickly afterwards.
Yeah, what am I talking about writing cash secured puts through earn? It's freaking in a couple hours. It's in like 12 hours.
Yeah, no, I mean the
I had to do that today, not now. Oh man. Yeah. I got the stream as Twas the night before SoFi, but it really doesn't feel like in a couple hours.
It doesn't. Yeah, somebody messaged me. One of my friends messaged me. He's like, "Hey, big day tomorrow." I'm like, "Dude, I have so many freaking meetings right now. I don't even have time to think about that." But yeah, it's gonna feel like that when my alarm rings at 6 a.m.
Yeah. And you better be up, because there's been a couple SoFi earnings that we've done. You haven't been there.
I'm sorry. Who's the one out of the two of us that has a reputation for being late? It's not me.
Yeah, but it should be though. People get on my back. You show up late. I've been there, man. I've been on time. I get no credit for it. I'm on time all the time. No one in chat wanted to say that I was early today. Look at when I started the stream. I started it at when? something a little earlier than 7. All right.
Sure. I got volleyball tonight, so I gotta. But the matches, the matches can go from 6:30 to 9:30 is the latest, and we have like 9:30 match tonight, so it's gonna be like until 10:30.
Got you.
And then I want to do a little workout afterwards, and then sleep like a baby.
Getting your workouts in.
Yeah, at night.
Yeah. Man, I'm on a health kick. Honestly, I'm doing all the right things right now.
Dude, you're the one that's like getting me to want to also focus on it, you know?
What does that mean?
Like surrounding yourself with people you're sort of going to emulate, like the lifestyle that they're like, the things they talk about, the lifestyle that they're doing. And so like you talking about like, oh, things that you're doing to better your health makes me want to focus as well on my health. I feel like I've neglected it for so long, man.
You want to tell the people what we're doing together? We're going on a little date.
Did you book that, by the way?
No, I have not yet.
All right. Well, let me know.
You going to tell them?
You can tell. I don't care. Yeah.
Me and Tevis are going on a little date later. We're going to go do a DEXA scan, which is like it's not an MRI, but it's a full body scan to check out everything from fat content to muscle mass to bone density to visceral fat levels to everything. So we're gonna make sure that we are in peak physical condition or just in a rather healthy state, and then try to improve from there.
Yeah, man. I can't be a SoFi multimillionaire on a yacht looking like I'm 80 years old. I gotta look like I've made it young, you know?
Yeah.
No,
like a couples massage. Not like a couples massage at all. We're just going to do a DEXA scan and then leave. We'll probably do dinner or something. We'll probably celebrate with like a cheeseburger or something.
Hell yeah.
All right, man. Thanks so much for dropping in.
Anyways, yeah, everybody, tomorrow catch us at 7 a.m. Make sure to do it on my channel and not this freaking loser's channel. And
okay.
I'll be waiting backstage early. And yeah, that channel, you can find it in the link down there on YouTube, TikTok, especially where I dance. And
no more TikTok, man. Just do YouTube. Just do YouTube.
Don't watch on Tanner's channel.
You're making it sound like I'm ending the stream. We're still streaming. So yeah.
All right. See
I'll
everybody
talk to you later. Yeah, absolute shameless plug. You know what? I was fine with it on YouTube. I'm like, yeah, you know what? He's coming, like give the man some love, and then he goes, check out TikTok, watch him dance and everything, so he can, get a couple heart emojis or whatever that they do over there. All right, live today, tomorrow is not promised to anyone. Yeah, just a nice philosophical reminder that enjoy today, because SoFi might not be reporting tomorrow. DEXA scans. Why is everyone so anti-health? I always find this, like, no matter what it is with health, anything. You can say, eggs are good for you. Then other people go, eggs are not good for you. Oh, protein's good. Protein's not good for you. Low fat, no. Good fats. And I'm actually am for good fats, but everything in health is some sort of scam to half the other population. Even though it doesn't matter how many studies and everything that have to be released, people will tear it. There's a real health fatigue, which actually stops a lot of people from working out. Get your liquid IV in, okay? Get your sodium intake, your electrolytes. Air is bad for you. I swear there's a thing that's about oxygen being bad for you, which is hilarious. Some people, so not worth it for the scan and possible radiation exposure. Yeah, no, not knowing whether you're dying or not is worth the radiation exposure. Anyway, so just going back to SoFi, we'll get back a little bit back on track here. Our mustache is good for you. Half the population says no. It's good for me, though. And honestly, guys, ever since I've grown it, the market has been going up. So the day that you see this mustache gone, consider protecting your portfolio from downsides. That's all I have to say. All right. Now, there was some other news in the markets that might actually interest SoFi investors. In particular, one that actually is directly interesting for SoFi was a new SoFi IPO, CFND, which actually goes live on August 7th. C1 Fund. C1 Fund goes public. SoFi will actually allow you to get early IPO access. Remember, SoFi gets paid every single time that they do these. It also increases the amount of users that come onto the SoFi Invest platform for these specific IPOs. The ones that we really want to see, is if OpenAI or Notion or Stripe or any of these high target IPOs or IPOs go public, that SoFi will actually get a lot of traction from that. I think the most recent one was probably Figma. But yeah, SoFi Invest, I'm interested to see what they do this quarter. It was a massive quarter for investing. Q3 looks like it's going to be just as good, but we'll see. So far it's just July, and that's historically the best month of trading. August a little bit different. We'll have to see. And then September, obviously October, that's where all the crashes end up happening. Not saying that there's going to be one this time. Just keep in mind that those are whenever every single Black Friday, Black Monday, Black Tuesday event ends up happening, that those usually do happen in September, end of September, early October. But overall, I think that we will end up getting a good trading quarter in Q3 as well. That should see a lot of growth for SoFi Invest. Really, really interested to see what we do with credit cards this time. It's not just the loan platform business that I'm excited about. And this is why I continue to make large bets on SoFi rather than the likes of Upstart, for example. Is yes, Upstart is interesting. Yes, there's some things that they're doing in artificial intelligence and building up this massive network of banks and asset managers and hedge funds and pension funds and all of these things that will want to buy their loans, and they can find those customers. But SoFi can replicate that exact same business. Okay. So far, we're not seeing any like the AI advantages that Upstart has, and they talk about it. The only advantage that we see is the amount of automated loans that are not seeing human approval. Okay, which I think was at 82% or something like this. Last time we saw 82% of loans were approved without any human interaction. That part is interesting. The actual underlying or the underwriting part is still not doing better than what traditional banks are doing. At all. You can see that in the UMI or the Upstart Macro Index, and they will show you that. Let's go ahead and check. Why can't I find up? I'll just have to type it out then. UMI is not a strong enough thing just yet. Okay. So if we go ahead and share here, which is actually still a good sign for, I don't know if it's going to dox me if I click that. So I'll just drop that real quick. Connecting to this person in this address. Upstart is right now at a 1.51 on their macro index. Now, the reason why I'm bringing this up, I'm not a shareholder of Upstart. I don't really care how they perform over time, but I do care about SoFi. And over the last year here, you can see the higher it is, the worse for Upstart's loans, and the lower it is, the better macro environment for Upstart for lending. Under one would actually be favorable for them. So if you go into their all-time records, you can actually see things got extremely good for Upstart. Okay. They were performing better than what they were expected to. And right now they're performing worse. So overall, we'll see how that ends up performing. It does actually affect SoFi. It's sort of a barometer for how strong the macro environment is. And that should be, good. Tanner has a good tan right now. Thank you, Dookie. I agree. I actually, I've been getting some sun. So Tanner is, to his name, Tanner. Tanner loves NVIDIA. Yep. Gen X Nurse knows it. That's actually by far the largest position that I have. Although I am very bullish on SoFi, the larger bets that I usually make are on companies with massive total addressable markets. SoFi has a massive total addressable market, but I'm a big fan on the company that I think today was actually just reported to have a larger market cap than Google and Meta put together. I think that's what it was. Or it was Amazon and Meta put together. Just insane statistics. So they are an absolute giant, pushing to new all-time highs. So if there are people here that are also as bullish as me on a company like NVIDIA, congratulations. It's been a phenomenal last couple months. Absolutely crazy. But look at the last 3 months. I mean, we've gone from $104 to $176.75. Amazon and Meta. Honestly, it might have been Evan's tweet. I think it was. So, yeah. Tanner said he'll do an all-nighter till the SoFi earnings begin. I did not say that at all. I'm getting my beauty sleep for sure. But it was a great post, Evan. Thank you. But yeah, I'm happy to talk about SoFi. I also want to try to get some more people in. It's seeming like a lot of people are very busy right now, but I do want to hear about how people are thinking. So I've reached out to a couple other SoFi voices tonight to see if maybe we can get them on the show. So they'll be popping in and out to see if they are buying, because I do know that some have purchased today going into the actual earnings. Speaking of, I mean, on time as always. The great and powerful Steven, you're live right now.
Why am I live?
I just went live 1 minute ago. You keep calling me right as I go live.
Why are you live?
Why am I live? I don't know. Do this for a living a little bit. I talk about stocks. SoFi's earnings are tomorrow. PayPal earnings tomorrow.
I was going to ask if you're nervous at all for SoFi tomorrow.
Dude, not even a little bit. You want to jump on this? You want to jump on the stream or no?
Sure. Send me a link. Give me 10 minutes.
Where on X?
No. Who the hell? No. Send it to my email like a normal person.
I don't even know your email. Don't say it right now. You're live.
Oh
I've never sent you anything to your email once.
I tell you all the time. Send it to my email like a normal person.
Okay, I'm gonna send it to you on X and or WhatsApp.
You can send it. No. Who has WhatsApp on their freaking computer? What is wrong with you?
Me? I do.
Yeah, that's weird. All right, send it to X.
Okay, I'll talk to you in a sec. I think he honestly secretly watches the show just consistently and acts like he doesn't at all, because the timing on his calls, they're to perfection. They honestly, send it to my email. I've never emailed Steven, not once. Our entire X chat is just link. Like, it's just, I think he does it just to bother me. Yeah, classic Steve. All I can say is, yeah, that's funny. Steve is a great dude, but you have to take in that New York angry at everyone and just realize that he actually genuinely is so happy. You have to read between the lines. He's a happy guy. It just doesn't always sound like it. Yeah, I just faxed him the link. He'll be on in a sec. We all know for sure though he types like this on his keyboard though. I mean, we're all like, it's 2 index fingers. 100%. There's zero question about it. Why do you have WhatsApp though? I'm an international man of mystery. I think it's a common app that's used around the world. So a lot of group chats and people that I talk to are on WhatsApp. It's yeah. He can turn off that anger like a faucet. Yeah, until you tell him that like Pokemon cards are not for investors, and then he'll, what did you say to me? It just goes completely red again. But yeah, he's not Canada happy. Did you hear the stream that he did whenever he was live the other day? I think it was on like a Mitts channel or something, and someone was having road rage behind him, and he's just screaming while live. Gotta love it. Yeah, tell him Costco is undervalued. That's a good one. Yeah, 100%. He would not be happy. Let's see how long it takes him to get in here, but I'll field a couple questions while we wait. Steve is doing his thing. Yeah. Carl says, why are you live? What am I supposed to be doing? I go live. On my job description, that's what I go live. That's what I do. I'm here to talk about stocks, and we're about to go into like the busiest week of my year. Okay. If we take a look, we've got SoFi and PayPal. I'm going to try to report on both. The live stream tomorrow won't have any PayPal talk in it unless they are exploding up 20% or down 20%. We're not going to make too many comments on PayPal. It's going to be, a SoFi stream for sure. What we want is a continuation of, up and to the right on EPS, up and to the right on revenue. And then let's pray for our PayPal holders. Hopefully that's some of you guys. Well, not hopefully, but if that's any of you guys, that happens for PayPal as well. Later on, maybe we'll do another stream either for Visa or, Marathon, or I don't know. The day after that, we have Microsoft, Meta, and Robinhood. I'm going to be focusing on Robinhood. I'm doing a stream with Amit and Roy. I'm also going to be in the Q&A for their earnings, so I'm going to ask a question there. So that's really what I'm going to focus on. And then I think it's Amazon, Apple, Coinbase. I'm going to do all those as well for the next day. Yeah. So it is a busy, busy week. Note always plays SoFi down. No, I just think he lets the numbers speak for him. The only thing that I wish is that like what you see SoFi do a lot, or Noto, is that he will talk about the 3-year out, the 5-year out, like time frame, and say we're going to be at 50 million members. We are going to have, be a top 10 financial institution. We're going to be a top 15 tech company. These are his estimations for his own business. If you look back at his previous long-term projections for the company, he's been right. His 2020 to 2025 assumptions are coming true. In fact, we're actually going to surpass it on financial services and lending. Those both will surpass his expected growth rate. The only one that won't will be the tech platform. Okay, that he was a little bit more bullish on, but there's been massive changes during COVID that have sort of prevented fintechs from continuing the seed funding and growth that they were expecting there. So that completely changed over a 5-year time frame. His new 5-year time frames are the same amount of bullishness, if not more bullish, and the market just doesn't believe him at all. The problem is that whenever he shows off guidance quarter after quarter, he raises it only about the amount that he's beaten on. If you truly are expecting more and more growth, which I know that they are, because we see it in their 2026 EPS, we see it in the 50 million members expected over the next 5 years or whatever it was, that clearly you're going to need to do better than what you're saying. And they do better than what they're saying, but you allow for this bearish perspective to come in and say, hey, but they're only expecting this much for next quarter. So how could they possibly get to 55 to 80 cents if they're only expecting this level of growth by the end of 2025? So there is a little bit of sandbag that Noto likes to do. We'll see. SoFi crypto date announcement tomorrow. They did say it'll be within 2025. Will he get more specific than that? I don't know. Maybe a certain month. Maybe he'll say within this quarter. I don't think he'll say August 17th, this is when we're dropping. I don't think that he's going to call for anything like that. Yeah. So that's the only thing, is that I feel, that they could be more bullish on that side, but the actual results are exciting. Do I have a question ready for SoFi's earnings? Or sorry, for Robinhood's earnings? No, not yet. I kind of want to see the results and then sort of craft what I think will be a question around what they have done. Doogie Pie said in here that Robinhood, or Amit was hyping Robinhood and having a following is what did SoFi in. Not at all. No. Amit has 80,000 followers. 5,000 people, 8,000 people sometimes streaming on his thing. SoFi has 11 million members and Robinhood has 27 or 26 million users on their platform. We're tiny. I mean, Amit is tiny and I'm a fraction of what the size of his audience is. So everyone thinks that we're able to pump these stocks or whatever. I mean, these are multi-10 billion plus businesses. Robinhood's like a 70, 80 billion dollar business, So put it into perspective on the impact that he has. Robinhood's a $94 billion thing. I was joking. I can never tell you seriously, all right? It's just text. It's hard for me to read the sarcasm in the text of a streaming wall of questions. But love you, Dookie. Thank you. But yeah, I think that SoFi could actually end up getting to that level of a ton of hype and a ton of excitement around the business, and people love the brand. The only problem is I think that the active trader space, Robinhood has done very well on, and that's what makes up for a lot of the 800 plus people that are watching right now are active traders. Okay. So whenever you think of, people that are doing complex option strategies, even just level 1 options, which is not complex at all, even doing that, SoFi can't help you today. So those people start to gravitate away from SoFi, invest into other platforms. Now, if you were to look at SoFi Money or people that need mortgages or personal loans or credit cards, SoFi is the place to be. But that really isn't this space. If you're talking about personal finance people, that's why I'm so confused that Dave Ramsey is not a fan of SoFi, because it seems like it would be a perfect fit. A company that kind of helps you get out of debt, is really trying to get your money right. It would seem like it would be an amazing fit, but he just wants to pump, credit unions and stuff. Speaking of, I don't know, dude, this was not the transition of a lifetime. Holy. But I do want to introduce the great and powerful Stephen Fiorillo. Dude, I was going to say, speaking of credit unions, but that was not. Speaking of Pokemon cards.
How shook are you right now?
Dude, I'm not shook at all. I'm very excited.
Okay.
I'm very excited. I'm not worried in the slightest. I'm going to get 9 hours of sleep tonight.
How the hell are you going to get 9 hours of sleep?
I've worked out today. I'm going to try to get a run or a sauna in later.
Okay.
And then, dude, I keep telling you this. If you have a sauna and then go straight to bed have a shower and then go to bed, there's nothing like it. You'll be asleep all night.
I doubt that very much.
You get up to go to the bathroom a ton?
No.
then you'll sleep all
I
night.
just don't really sleep.
Your brain's running too fast.
I have a very hard time sleeping.
Yeah. What are we saying? 4 hours? 4 hours a night?
No, not that bad. I mean, last night was probably close to 5. Anywhere from 5 to 6.5 is like a really good night for me. It's like a
Dude,
really good night.
I don't remember the last time I got 6.5 hours.
I'd say 5.5 is usually an average.
You got to get the sleep, man.
I can't do it. It's crazy.
What is happening tomorrow?
Dude, don't be surprised. Don't be surprised.
If?
I don't want to, jinx it, but just don't be surprised.
Man. Okay, what does better? SoFi or PayPal tomorrow?
Oh, PayPal. PayPal is so undervalued that it should be at like 125 right now.
Well, I do agree that it's undervalued, but the market continues to pull it down because of things like stablecoins and stuff. What are you eating?
Don't worry about it.
That looked like Menchie's or something, like frozen yogurt.
Don't worry about it.
Is it a dairy-based product?
I mean, there's definitely dairy in there.
What is it?
What?
Is it Cold Stone Creamery?
No.
Is it mangoes?
Although Cold Stone is like 6 blocks from me, I could go to Cold Stone right now if I wanted to.
Is it pie?
I'd need a plate for pie. No, it's yogurt and fresh blueberries.
Yeah. Mike, thank you for the donation. Bro said PayPal. PayPal's going to do better. I mean, the run-up is
very
definitely
undervalued.
PayPal has not gone up 100% in the last 3 months. SoFi has done a significant run, but also the performance is going to be a lot different. I mean, PayPal is going to grow by 7%, and SoFi is going to grow potentially above 40%.
Look, I want SoFi to go up. I'm just worried that it's gone up so much over the past month and a half.
Yeah. What's your fair value on SoFi?
I have no idea. I don't even know how to value it at this point.
You're lost right now. You are shook. I can't
I'm not
believe
shook.
it.
If SoFi goes to 10 tomorrow, it doesn't matter. Like, I'm the least thing of shook. I could care less what it does. Goes to 10, goes to 30, doesn't change my life. Like,
but you are a shareholder of this business.
yeah. Fairly big one.
Have you talked about this online and this is getting in your... I feel like you're one of those bearish analysts who has put out a piece that has said, hey, this stock could probably go lower. And then it doubles. And then you're like, I don't even care anymore.
Look at my track record. I've never turned bearish on it.
Well, did you put it to a hold last time?
No, it's always been buy.
All right. That's fair.
Never been neutral.
But you did put out an article that was here. Let me find it. But it was talking about how they're a bank stock and that they should not be valued like that.
They are a bank. They are a financial institution. They make their money off of traditional finance, not tech. They're a freaking bank stock. Like, you can't debate it. As much as you and Chris want to debate that, you can't debate it. I'm
not debating that part. They are a bank, but Robinhood makes all their money from financial institution style revenue as well.
Robinhood has huge operating margins, and their innovation and delivery of products is at warp speed.
So if we start to see an acceleration of growth at SoFi, which is what's expected this quarter, okay, we're going from essentially 20% year over year growth to nearly 40%. And that's Wall Street's expectations. It is bad comp year over year, but there still is accelerated growth.
Look, SoFi could double from here. Look at what Robinhood's done. If SoFi accelerates growth and if they become more profitable, and if they beat and raise again, it could go up. quite easily.
But you're not really seeing that, or
I
you do
want to
see that.
see the AWS of fintech. That is the only thing I care about at this point.
What about the loan platform business?
Loan platform business is going to continue to grow. Rate cuts are going to be bullish. You're going to have bigger originations. I want to see the AWS of fintech. If that does not materialize, I'm a goner.
That's fair.
That's the main reason why I invested in this company. I don't need another bank in my portfolio.
That's fair. I think that the growth is still going to be slow this quarter on Galileo. What are you eating?
I told you.
It's a dairy product, or it has dairy in it. Sorry.
I told you it's yogurt with fresh blueberries.
Okay, so definitely a dairy product.
Do you not listen?
No, I didn't hear that part. I must have been reading chat.
Huh.
So I agree with you that Galileo should continue to turn bullish, but I think you're undervaluing the loan platform business. I think that you should look back into that because, like, for real, I think it adds, like, it doubles the stock price, and we're only 3 quarters into it, but that is going to.
The loan platform business has been the driving force and it's going to continue to get better. I'm not disputing any of that.
Driving force of what?
Of the company right
now. Of the last little bit, maybe.
I am more interested in the tech platform. Because, look, SoFi could be at $100 in 2 or 3 years if the AWS of fintech actually matures and they get a couple of really big clients. They'll be looked at as a tech company.
Rob says, what do you mean by SoFi as the AWS of fintech? I'm actually interested in this as well. I know what Anthony Noto sees, but what's your vision for what SoFi is late game?
So when I say AWS of fintech, what does AWS do?
I mean, the background for the entire internet, essentially.
Right. So Amazon created a cloud platform for its own business to save money. And then they decided to utilize that to power other companies, including their competitors, backends. And they generate revenue from their competitors, in addition to saving money on something they would have needed to outsource. SoFi is doing the same thing. They acquired Technesis, they combined it with Galileo, and they have created a full stack banking core for themselves, saving about $60 to $80 million a year. And they are currently out to market in several RFPs trying to sell this to their competitors. If they do that, they will not only be saving money and innovating at the speed that they want to innovate, they'll also be generating revenue and profitability from that platform by powering their competitors. That's the AWS of fintech, because they're the only company that can pull that off. And not just that, because they have a banking license, they'll be able to sell this to companies that are not a bank and power their entire back end and back end. So that's why this has such huge potential. But if that does not play out in that fashion, I'm just not interested anymore.
What's the growth rate that you're looking at to say they are back on track?
I don't think you can say they ever got off track. I just think the technology segment has been lackluster, and the financial services and loan platform has been so good that it hasn't necessarily mattered. But to get them to that next level, you need the tech segment.
Well, I don't know. They used to grow at like 20+% year over year, and now they're growing at, like, I think last quarter was like 7%. So I would say that they've definitely gone off track, but that's mainly because the time to their new deals with larger customers have taken much longer than they expected. They expected to have signed up customers by now. But,
if you're talking about the tech segment, yes. I mean, Galileo's not growing the way that everybody thought it would.
yeah, I'm talking about the AWS of fintech. Like, what growth rate do you want that part of the business to grow at for you to feel comfortable that, you know,
it's not necessarily a growth rate. I want to see a company like Citibank on it. I want to see Wells Fargo on it. I want big institutions on it, and then I want to see large amounts of revenue. Because think about it. If you get Citigroup, that could be a $500 million to $1 billion contract a year in revenue. If you get a couple of regional banks and some larger bank, U.S. Bank Corp, something, I mean, this could be a couple $1 billion a year in revenue coming in, just reoccurring from something that they already have. They don't have to build something new.
Yeah.
That's the thing. They already have the technology. It's already built. They're already utilizing it. They already have a use case. So if they can cross-sell that to other competitors, it becomes a huge win for everybody.
Yeah, no, I agree with you. I agree with you. But I don't know, man. I think that overall, I look at the business as a whole, and not one individual segment do I think needs to work. Almost like Google as well. Like YouTube might be doing well, search might be doing well, cloud might be doing well, but I don't need like one in particular business function to do well for me to think that the conglomerate is, you know, doing well.
Let's call it by its correct name, Alphabet.
So,
and Alphabet is worth a minimum of $250 a share.
I agree with you.
I think I showed you the numbers on how I backed my way into it. At $250 a share, I don't know about today, but as of the other day, I think on Friday, it is still the cheapest stock in the Mag 7 on a forward earnings basis.
I saw your 291, or Google would need to get to $291 a share to just be the same valuation as Apple. Yeah.
Like, what are we doing?
Crazy, and they're not moving at all.
What are we doing? It's crazy.
Yeah. No, I honestly think those companies should be flipped. I think Apple should be priced where Google is.
I wouldn't hate that.
And then I'd actually consider being a buyer of the full Mag 7. But I don't know.
I mean, I'm not getting rid of Apple, but I'm not excited about Apple. But at the same time, the bar is so low. If Apple bought Perplexity, I think the stock would go up $20 or $30 overnight because of just how nobody is excited about their AI component.
Yeah. No, I completely agree with you. I completely agree. Also, I bought more Amazon today. I'm getting pretty excited about the name. What do you think they're going to show, especially in terms of capital expenditures coming up for Q2? So we see that in a couple of days. I think we're going to see a raise in CapEx. Do you agree?
So I'm going to tell you something. I think NVIDIA is going to be the first $5 trillion company.
Yep.
I think Amazon could be the first $10 trillion company.
Crazy. What year?
I don't know. It's hard. But, and I know this is like a long shot. It could happen 2030, 2031. Here's why. In the next 3 or 4 years, Amazon should be finished building out their data centers and should go into maintenance mode instead of hypergrowth mode. When that happens, they're going to be able to pull a lever and probably just dump 30, 40 billion to free cash flow from their CapEx spend. Initiate huge buyback. 2029, they're expected to be the first $1 trillion revenue company. And I think AWS has such a whirlwind of growth ahead of it. And they're now the 3rd largest company for advertising. I can see Amazon really breaking out hard.
I think so. I'm a believer in what you're saying about Amazon. I don't know if it's the first 10 that's a pretty large extension from where they are today.
It is.
But do you know, I think Evan posted this. NVIDIA is the price right now of Amazon and Meta put together.
Yeah, it's crazy.
That's crazy, dude.
Crazy.
And we both agree, like, well, I wouldn't say they're severely undervalued, but it's still going up. The demand continues to rise. And after this quarter that we're about to see, which we're going to see a lot more quarters until the end of the year. Well, I mean, one more publicly, but then we're going to see another one in January, February. But We get to
How
see
about this?
another CapEx raise from all of these businesses. And that's not following the OpenAIs of the world, the XAIs, all of the other, Chinese companies that are now going to start getting back online with NVIDIA. Like, this is an insane ad for NVIDIA. And I think they're at 4.3 trillion already. Like, we've already gained, since we've hit that $4 trillion mark, $300 billion. They've almost added on another Palantir to their market cap.
So
Insane.
how about the fact that NVIDIA could be at 215 by the end of the summer?
End of the summer?
I mean,
What do you see that on?
well, they had a $5 billion write-down last quarter, and guess what's going to happen in a couple of weeks? That's going to get reversed most likely. Straight to net income.
You think that's going to be in this next quarter?
Could be. It's either going to be in this quarter or Q3, but it's probably going to be in this quarter. And now they're able to sell to China. I mean, it's really interesting. I want to share this, and then I got to run out and do something, but I'll be back in 5 minutes. Hold on.
No problem. No problem.
But yeah, look how disgusting Google is. We'll call it Google for you, because I know you don't like saying Alphabet. So
yeah, because it's just less recognizable. But zoom in just a tad.
So right now it's trading at less than 20 times this year's earnings. Zoom again?
Yeah, just a little bit. Yeah.
So it's trading at less than 20 times earnings. It's trading at just over 16 times 2027. We put this at 250. It's still the cheapest in the Mag 7. If we go to 260, still the cheapest in the Mag 7. Go to 290, it's still cheaper than Apple.
Yeah, and that's across multiple years. So that's factoring in 2026 and 2027.
Yeah, so
earnings
think
prediction.
about this. At 292, it's basically the same valuation as Apple, and they have, roughly the same forward EPS growth over the next 2 years. And Alphabet/Google's forward EPS number looks low because the analysts keep raising 2025 EPS because of all the growth they're showing. This really should be like 30%, but the 2025 number has gotten raised so much, but they haven't taken 2027 up, that the forward is being compressed. But Alphabet should be, I'd say, anywhere is 250 to 300 is fair value.
Did you see their cloud backlog, by the way?
Yeah, 110 billion.
Yeah, 100. I think it was 108 or something.
Whatever it is. It's disgusting.
And such a massive uptick from last quarter.
Look at this. They're generating 133 billion from cash from operations. What happens when they drop CapEx? What happens when they don't have to build out anymore? Like, even spending 67 billion in CapEx over the trailing 12, they've still done 67 billion in free cash flow. It's insane.
Let's not put those types of vibes into the universe, though. I don't want them to drop CapEx.
Dude,
by the way, you're using Google right now to facilitate all these charts.
Yeah, because I like their charts better than Excel when I group things together.
Yeah, me too.
So,
me too. They're like Google's in all of our lives, and then the amount that they make on. Also, what do you think of, like Kai said right here, AMD today?
I didn't look at it.
They got a massive upgrade, saying I think it was that they were going to make on their AI chips like 9.5 billion was the last estimate, and now it's 15.6 billion. Crazy upgrade. Crazy. So that was very exciting. But then, as sort of a pushback, NVIDIA actually posted today about their new GB300 NVL72s and how they continue to lower, TCO. What total cost of ownership? Okay, I couldn't put the letters together for some reason. Anyway, and how it actually helps with energy costs by spreading out the, ways that it actually uses the energy, because it has a power supply unit in the actual system this time. So they just continue to lower the total cost of ownership, which makes paying their premium more worth it over time. It's just unbelievably incredible. And then that's just this version. By the time AMD continues to push out new chips, I'm not betting against AMD at all, but why I think that NVIDIA will continue to sell chips is that if you try to buy their old version, by the time you do that, they'll have Vera Rubin chips out. And then you'll have to get those systems up online because they're going to save you, 30, 45, 50% versus the old models. And yet they'll be able to charge you 25, 30% more for those chips as well. So
NVIDIA is the greatest company right now.
It is.
Period. You can't dispute that.
Yeah. They're enabling the largest technological change ever seen in history. Robots.
Absolutely incredible. I just want to show you one thing, and then I got to run downstairs for a minute. But I'm starting to take offense to all the alphabet haters out there.
Tell me.
I'm really starting to take offense.
Show me.
I am. Hold on.
I was talking about how you type on your keyboard with 2 index fingers. Is that true? Or you got all the fingers moving?
Dude, who types with 2 fingers?
I think you do.
Are you serious?
Yeah, I think you got one of those going.
You're serious?
Did I hit a soft spot?
Tanner, I don't even need to look at a freaking screen and I can type and have everything accurate.
With 2 fingers? That's impressive with 2 fingers.
No, with 2 hands. All right. I'm starting to really take offense to Alphabet. People really hate on Alphabet.
Let's see.
Like, search is not dead. Got news for everybody. They grew year over year by almost 12%. This division, quarter over quarter, grew 7%. They did over $54 billion in revenue.
You got to do me a couple zooms here. A couple. Thank you.
And then look at Google Cloud. Look how ridiculous this is.
Yeah.
31.67% year over year growth. Look at that. It's incredible.
It's unbelievable, dude. And that's just this. By the way, it's an acceleration of growth from before at higher margins, the highest margins they've posted. And yet still, like, I understand disrespecting the company because Google Cloud is a much smaller thing. And if Google Network and search were all dying, but it's not even true. Search, killed it this quarter.
Does search look like it's dying? Look at this. Does search look like it's dying?
And by the way, those peaks,
like it's slowing down.
Those peaks are Q4s. So that's what's supposed to happen, even if they were, even if no one thought they were dying, they'd still have peaks and valleys.
Established. Search is the furthest thing from dying, and everybody's like, it's going to get cannibalized. It's going to get cannibalized. Show me the proof. Show me the proof.
Yeah. No, I
agree.
There's
no proof to the bear case. Not an ounce.
You even see people like Amit, right? This is a young guy who working professional, and he goes directly to Google now to look up searches of live news because he knows that there's going to be an AI overview, which they are now monetizing at the same rate. And from what Google said, forget all the third-party data that has essentially no data or pieces. Okay. But essentially pieces of what, these third-party providers have is that they're saying young people are coming, they're using it more, and because of artificial intelligence, they actually have more questions to ask. Paid clicks were up year over year. The cost per click was up. Google Cloud had insane growth, and the backlog is at the highest we've ever seen, $108 billion backlog. But what happens whenever you have that high of a backlog? You got to spend it, or you have to make sure that you have the chips and the data centers available to continue to offer those cloud solutions. So they are buying up NVIDIA chips. They are putting a lot of that towards Broadcom and other providers that are offering them their TPUs, their tensor processing units. And yeah, very, very happy Alphabet shareholder, very happy Amazon shareholder, Nvidia shareholder. Honestly, big tech is a nice, very comfortable place to be. You know? And SoFi is a very comfortable place to be as well. Maybe Stephen is not fully on that wave as much as I am, but truly, I'm a very happy SoFi shareholder, and actually think it can pump to $30+ price ranges here if they can show off that going forward they can hold up the level of growth, especially in the member base, right? Members, I know analysts don't like to think about it this way, but SoFi to a certain degree is as easy as understanding that members are the best forward indicator for future success. Okay, we already know based on their margins that we're end up seeing coming on, and their incremental margins that we end up seeing. So what's being tacked on is that they are getting more and more profitable the more members that they have, because there's a lot of fixed costs. So if you know you're about to spend this much, regardless if you have 1 million members or 11 million members on that stack, and you still only have to pay that much, that improves the margin per customer. So that's why it's also very important to realize that what percentage of SoFi's expenses are fixed costs versus variable costs. Yeah. Do you think that Nvidia is still a buy? Markets are getting more expensive. Okay, so as a shareholder and someone who was pounding the table and screaming buy during the DeepSeek events and all of these, moments, that it's not as much of a buy as it was back then. It wasn't a strong buy. It's still a buy rating. So if I had to put it into strong buy, strong sell, neutral buy, strong buy, it's probably a buy. Okay. Do you think it could make sense for SoFi and Nu to merge? Absolutely not. They don't want anything to do with each other. Obviously, I mean, it might make for a strong business overall, but SoFi wouldn't want to do that, and Nubank would not want to do that either. SoFi or Nubank doesn't really do acquisitions all that often, or mergers in general. So, acquisitions in general, they wouldn't want to do a merger. Is Tanner from Canada? He looks like what a Canadian looks like in my head. You have an accurate imagination. I am from Canada. Yeah. They'll add 850,000 members or 900,000 for Q2. I think 900,000 is a little bit out of the range for me. 850,000 could be in the range. So my original range was 810 to 850,000. I ended up settling at 840,000 is what I was expecting, but it could be as low as 810,000 as well. It's hard to gauge app downloads, sensor tower data, website traffic, and tried to pull an accurate assumption out of those numbers, because they're not always a one-to-one. Like, even sensor tower data for app downloads is not a one-to-one for new members each and every quarter. If you retroactively take the data and go backwards, it's not always one-to-one. In fact, it's very rarely one-to-one. It's almost like a 120% to 80% range. So there's about a 40% accuracy range there. 1 million new members in Q2. You know what's funny though? If you plot it out in the amount of growth that SoFi has been doing each and every quarter, what we actually see is that 1 million new members is going to come in Q1 of 2026. 1 million new members. And then every quarter after that, we're not expecting less than 1 million. So there's going to be a time where SoFi is adding 2 million new members per quarter, 3 million new members per quarter, if we continue to turn around the same amount of customer acquisition costs and increase sales and marketing at the amount that SoFi can spend, which at the market that they're playing in, which is all of America, essentially, they can continue to replicate this over and over and over with high success. It's one of the most amazing things about SoFi. Everyone complains about their customer acquisition, but if you actually take Block, which always people get so excited about their customer acquisition. It's industry leading, Tanner. is it now? Okay, take their new member counts and divide it out by the amount that they actually spend on sales and marketing. So what Block says is that, for us to get a new member, it costs us nearly nothing. Okay, well, why do you keep spending on those members? Why are you still putting out more advertisements and everything? Because it's hard for you to keep them on platform. Okay, so the way that I like to look at sales and marketing is the amount that they're spending per quarter divided out by the amount of new members that they bring on the platform, assuming that you don't have to pay to keep your customers on platform. And what you end up seeing is that Cash App has insane fluctuation in customer acquisition costs, as much as $500-$600 per customer. And in fact, last quarter we didn't even know how much they did because they didn't add a single new active customer because they rounded up to a solid 57 million actives, and they haven't changed that in 3 quarters. So how do you know without commentary how many new members that they've actually added? So they've spent all this money on sales and marketing, and yet we haven't seen any change in customer acquisition or in monthly active users, because there's members getting off and there's new members coming on, but we don't know how many that are or how many there is that are shifting out. Robinhood, what you end up seeing is, once again, lots of fluctuation. So in times where the market is slow, they spend similar amounts of sales and marketing, okay, because they just have staff on the go, everything like this. They stay flat. But the amount of new members fluctuates depending on how excitable the market is. So if the market's green, people are making money, people tell that about their friends and family, their coworkers, everyone wants to get invested. Robinhood's an easy place for people to get started. So you see customer acquisition fall through the ground below $20 per person on really, really hot moments. I think that's what we're going to see this quarter. SoFi has this unbelievable stable customer acquisition cost, and I can pull this up here. It's roughly around $300 per customer, which sounds high, but the average revenue per user is 10, 20x what you'd see at Block as well. So it actually does make a lot of sense. It's much, much lower than the banks. Essentially, the way that SoFi says it is that, they'll pay $1,000 for a personal loan customer. They'll pay $50 for a SoFi Money user, or $75 per SoFi Money user, $15 for Relay. So their budgeting app. Okay. What ends up happening is that once those people do get onto the platform, we try to increase the amount of people that go from a budgeting app to SoFi Money to a personal loan without paying anything extra. Okay. But what's great about having a stable customer acquisition cost is that you're able to model out that, okay, they spend $300 per customer. Great. How much can they spend? Can they do that if they spend 100 million? Can they replicate that if they spend 500 million? So far, the model says yes. No matter how much they spend, they can translate that into an exact amount of new members. Great. The whole time that they've done this, they've increased their margin, which means that we're not seeing any signs of SoFi's ability to replicate and speed up the process of what they've done. Now, it hasn't been fast on new member ads recently because the macro hasn't been in their favor. But by the way, if we just take a look at some charts here, SoFi's margin has gone in one direction. Contribution margin, net margin, adjusted EBITDA margin, all going in one direction. I expect new highs on all 3 of these segments next quarter. Okay. So, well, not net highs in terms of 15.2%, but I expect above 10% for net income. I expect above 28% for adjusted EBITDA, and I expect above 54% for contribution profit. Okay, but with that's going to come new expenses as well. But let's go ahead and see where their customer acquisition cost is, or we can find it here. I've just been building and building and building on this spreadsheet for ever. So where are my expenses? Expenses, customer acquisition cost. So if we just take this and model this out, and there will be fluctuations, right? But overall, that is insanely linear. Incredible. So if you're telling me you can spend 302 or 304 or 360 or 288, 284, 299, you know how many customers you are going to get on for that amount of spend. Sorry, that's a little bit small. I can try to fold that, maybe make it a little bit bigger, but you get the point. You know, it's an unbelievable linear business from SoFi that allows them to replicate it depending on how much they spend, which means that today they might be doing, 800,000 new members, but it means that tomorrow, if they can keep up that customer acquisition cost to a certain amount, if sales and marketing ramps, they get that to 900,000, 1 million, 2 million, 3 million. And that is Noto's hope right now, if he's going to get to 50 million members in 5 years or whatever. Steve,
Yes.
if they get to 50 million members over the next 5 years, you're going to tell me you're still worried about the AWS of fintech? They're going to be one of the largest financial institutions in America, and you're worried about the AWS of fintech?
One of the largest financial institutions in America by what metric?
By member count.
Okay. So what?
Well, each member staying on platform, taking out new products. You don't think that they'll be able to get into business banking by that point, wealth management,
They should already be there. How about that?
I agree.
But once again, I don't need another financial institution. Like, in all seriousness, this money would have been better off being put in NVIDIA at this point.
Yeah, but that's speaking like retroactively. Hindsight's 2020.
I get that, but I still think SoFi or NVIDIA over the next year, NVIDIA can go more capital appreciation than SoFi.
Not everyone agrees.
Not everybody agrees. That's fine, but I can make my own decisions, and I think that NVIDIA has a better chance at generating more return than SoFi over the next year. Now, if SoFi actually delivers on the tech platform, I think SoFi could outperform NVIDIA. But look, I think that by the end of 2026, NVIDIA could be at 250 or 300.
Hold on a sec, though, because there is before we get to NVIDIA, or again to NVIDIA, you said you don't want another financial institution. What makes you confident in investing in the Bank of America's
Because I'm getting paid to invest in Bank of America.
It's the dividend that's keeping you.
Correct.
Okay.
Citigroup, my yield on cost with Citigroup is like 5.5%.
If you were to look at the next 5 years for Bank of America, Citi, JP Morgan, and you think about your total shareholder return, including dividends, buybacks, and stock appreciation, which one do you think will outperform?
From here, definitely not Bank of America. Citi's already had its run. I mean, my average cost.
You're including SoFi as well, I hope.
Yeah, no, you asked about JP Morgan, Bank of America, Citigroup, and SoFi.
Yeah. Citigroup
has already had its run. My average cost is either high 30s or low 40s. I'd have to look. But I've written that up the whole way because I've been saying that based on their tangible book value, this thing is grossly undervalued. JP Morgan, I don't think necessarily can double from here. They'd have to do something really spectacular. Out of those, SoFi definitely, in my opinion, has the most potential. But I don't need another stock that has a lot of potential. Like, I can just put it in one of the other ones I have that has a lot of potential.
Yes, but you do have money in, well, I don't know your portfolio, but I assume you have money in Citigroup, JP Morgan, and Bank of America.
I don't have JP Morgan. I have Citigroup and Bank of America.
Okay, so why don't you rotate those out?
Because to buy it's in a separate portfolio that I have for income.
Yeah, but then you're counting them. So you're saying they're separated, but you're including them in your
reasons.
But you're including them in your sector diversification. You're saying I have too many financials.
I am including it in. I have an income portfolio that is strictly about income. Okay, I don't need another bank because I have those. Now, if SoFi can deliver on the AWS of fintech, I'm happy to keep it because I think the sky's the limit. But if it can't, I'd rather put that money in Amazon or NVIDIA or Meta. And I already have a lot of those. But I'd rather allocate that money across those three.
Do you think that SoFi will underperform the Meg 7 names?
Not all of them, but I think it'll outperform Apple. But I don't think it outperforms Microsoft. I don't think it's going to outperform NVIDIA. I don't think it's going to outperform Amazon. It could outperform Google because of how much the market hates Google. But I don't think it's outperforming NVIDIA. And when we think about Tesla, I think there's too many wild cards to even make a statement on that.
I personally do think SoFi outperforms Microsoft, but
Have
Microsoft
you seen what
obviously.
Microsoft's doing?
Sorry,
Have you seen what Microsoft is doing?
in what means?
Just in general. Like, look at that chart. It's incredible.
Of course, but I also think that the amount of new markets that they need to find in order to double from here, which I actually do think they will. Like, I do think Microsoft still has a double from here, but that is a lot to go from a 3-point-something trillion dollar business to a $7 trillion business. Much easier for a $20 billion business in a proven total
I
addressable
love how
market.
people are saying Microsoft is boring, yet it's outperforming the S&P over the past 5 years.
Yeah. I'm not worried about. We're talking, okay? I'm not worried about the comments that say
crazy.
Microsoft is boring. I'm talking about actual financials here. Obviously, Microsoft's a giant, but so is the market cap. Okay? SoFi is still growing into a market that's huge. There's sector diversification that they can get into, new geographies. Anthony Noto, you still think is a legendary CEO.
He is a top 5 CEO.
Top 5. So you're
The reason
placing
I
him
say
above.
that is
You're placing him
because
above 495 of the S&P 500 CEOs. And out of the Mag 7 that you said that he won't beat, there are 2 of them that you think that he is better than.
Here's why.
3 of
I
them.
don't think many people could have gotten through the pandemic the way that he did, given his situation. And that counts for a lot. The Mag 7 companies didn't have 1 arm and 2 legs tied behind their back, and they didn't get their largest revenue generator basically put on life support. So in order to manage your way out of that speaks volumes.
And we've never seen a good time for SoFi.
We've never seen a good time for SoFi.
So what does that look like in the hands of a top 5 CEO during, not a hold your ground survival phase?
I get it. I am in it for the tech, and I'm not seeing the tech trade at the moment. Like, I really want to see RFPs won. I really do. That's my big focus with them.
Yeah.
Because here's the other thing. They're competing against Robinhood. And right now, I think Robinhood is doing way more and building a way better mousetrap than SoFi.
Okay.
So we'll see.
Go on. Tell me about the other trades.
What other trades?
Like NVIDIA.
What, I think NVIDIA could be 250 to 300 next year.
300.
Yeah.
I think that's a new price I've heard from you. Why just continue?
I mean, think about it. If they're in a position where they can do 120, 125 billion in net income this year, if they keep a growth
What's the next
rate,
biggest company to 125 billion in net income?
what?
I know it's Microsoft, but I don't know what they're at.
No, the next largest company would be Alphabet by net income, then Apple, then Microsoft.
Okay, and
The way that this year's playing out right now.
Alphabet's was what on a 2025 expected?
Hold on. So Alphabet's done 115 in the trailing 12, and it did 100 last year. So I think that NVIDIA can beat Alphabet this year in net income. And then if the model continues, I think that they could break 150 billion in net income next year, especially given where all the CapEx spend is going. So
Yeah. So I'm seeing for full year. Oh, sorry. Never mind. It's only going to show me an EPS, which is less fun. Never mind.
Let's not forget, a lot of people bought SoFi in the high single digits. Okay. SoFi's hit $20 3 times prior to this period. So we're not past all-time highs yet.
Google is expecting for 2025 $121.6 billion in net income.
It's incredible.
121, and then in 2026 127. But by the time that happens, Nvidia will have a much faster growth rate.
Yeah, it's just there's so many high-quality names out there that I don't know. I'm just more bullish on other companies at the moment. But there are things that can get me back to being a Super Bowl on SoFi tomorrow. We'll see.
Yeah. What else are you looking at these days?
Can you pull that comment up?
Which
Steve
one?
Steve doesn't own SoFi. I can tell he missed the boat. Like, really?
Yeah, I mean, he definitely didn't miss the boat. He's been a shareholder since like 4, but yeah.
Yeah, I bought a lot of SoFi, man.
I mean,
you can own something and not be as bullish as you once were on it.
A little bit of it surprises me that you are not as bullish into what could be the most exciting earnings we've ever seen.
We'll see.
I don't know, man. What are you expecting for PayPal?
Oh, no, I'm not in it, so I'm not really paying attention to it. I just think it's very undervalued. I exited that a while ago.
So you exited PayPal. You didn't exit SoFi, and you think that PayPal is going to do better this week than SoFi?
Well, PayPal had run. I had made some good money on it, and SoFi was still so depressed at the time. I think SoFi was at like $9 or $10 when I exited PayPal.
Yeah,
so
yeah.
It didn't make sense to exit SoFi.
Do you have charts on Amazon for what you foresee is going to happen for margin over the next little bit?
No, I haven't modeled it out. I have charts up to this quarter.
Got you. I'd like to see that if you ever do end up building that, of like what you foresee, because obviously the $10 trillion claim is strong, and it's maybe, if that is the bull case, maybe one of the easiest buys ever. I bought more today, not on a $10 trillion outcome, but just on the idea of like Google's cloud growth was so insane, and I just think that that's what we're going to see from all of them.
Look at what Seeking Alpha has. I mean,
could you hold the fort down while you show off these numbers for like 30 seconds? I just need to run to the bathroom real quick.
Yeah, sure.
Okay, 1 second.
So Amazon is expected to do $1 trillion in 2029. So the whole reason why I am in it, specifically as heavy as I went, is because I do think they'll be the first trillion. And when they end up chopping off CapEx, the free cash flow could explode. And you're paying historically a very low number on PE, which I look at these numbers and I think that there's a lot of upside potential. And when we go into the financials, they've done $93 billion in CapEx over the trailing 12. They're spending the most on CapEx. When they go into maintenance mode, this is a company that could end up spending $50 billion in CapEx just on maintenance once all the data centers are built out, and increase their free cash flow by $40 to $45 billion. And that's not including future cash from operations that are being generated. So cash from operations is going up. I mean, they could do a huge buyback program. There's just a lot of things. Tanner, you probably couldn't hear what I said, but
no.
With the earnings estimates, I mean, $1 trillion in 2029, and then $1.5 trillion in 2034. So you start thinking about margins, and you start thinking about when they don't have to spend as much money anymore. This becomes a story where they could be doing $250 billion in free cash flow a year.
Yeah.
So,
yeah.
I mean, it's interesting.
Do you think that they're I mean, you have said before of like essentially that you think that CapEx will slow, but we're nowhere near them localizing a lot of their buildings, like their warehouses for a lot of rural areas just in America. There's going to be massive international expansion. Like this seems like a multi-decade long expansion rather than a couple of years.
Yeah, I don't know how long it's going to be. I mean, nobody knows. It could be 3, it could be 5, it could be 7. I don't know.
They're
But
probably
at
gonna
some point, CapEx is going to slow.
You think so?
Yeah.
Yeah.
Why do people want me to do restaurant reviews?
Because you love talking about food.
Dude,
Honestly, I think it's the greatest thing about you is you love loving things.
Dude, I love food.
You love food, you love stocks, you love any collectible.
The Pokemon market is insane right now, by the way.
Everything's insane because people feel rich right now. Which is a good thing. It is a good thing. But it means that there's a lot of companies making a lot of money.
Yeah.
I love brokerages too. Like I can't get enough of investing in the companies that are the toll roads for other businesses. That's another one that I think that you should do a double take, triple take of now. I've changed my opinion on Coinbase ever since I talked to Devin Ryan, and he was just like, man, Coinbase is the AWS for crypto. And it's not like that's the assumption of where they want to be. They are. Like the government deals with them, every institution, BlackRock, Aladdin, like it's all goes through Coinbase Prime.
Tanner, do you know what Labubu is?
I do know what Labubu is.
Do you have any?
I was going to buy a Coca-Cola Labubu, and then I didn't.
I may have a couple of cases. But
I think you were the person that actually told me about what a Labubu was, but I never.
When it hits the Wall Street Journal, it's just insane. What has happened is amazing.
These are fun times. It reminds me of 2021, though.
Listen. 2021. I'm going to say it. There are some stocks that seem a lot. Let's rephrase it. There's some stocks that really feel toppy right now.
Yeah, you can say it if you want. I mean, this
Palantir, which
yeah,
I'm a shareholder of. Cloudflare, which I'm not a shareholder of, and DoorDash, which I'm not a shareholder of.
You didn't say another name that I thought you were going to say.
I mean, I'm refraining from saying Robinhood, even though
that's not what I thought you were going to say.
Only because I think they can siphon so much off of everybody else that it may not be too crazy. It's certainly not nearly as crazy as Palantir. Palantir is the stupidest valuation, and this is going to be how this is not going to be Cisco of 2000. I don't understand.
I agree with you to some extent, but with Robinhood, I don't even see it at all. Like I actually think like if
Robinhood can get so much bigger that's why I said I was refraining, because they can get so many people from all the incumbents that there's so much growth ahead of them.
I did think you were going to say that your classic name, Tesla, Costco, maybe.
I'm giving up on freaking Tesla. I'm giving up. It's so stupid. Like the fact that it's still at this valuation is so stupid. And I'm a Tesla shareholder, and it is so stupid. And that's the thing. I'm not afraid to say that things are ridiculous that I'm still a shareholder of. Like, it does not benefit me to say that their valuations are ridiculous at all, but they're ridiculous.
What do you think of BMNR and SBET?
I don't even know what SBET is.
Do you know BMNR?
No.
They are
the only one that I know is the ETH machine because I bought that.
Yeah, they're exactly the same. They are Ethereum treasuries that are going to have a ton of dilution in order to raise capital to buy more Ethereum, rinse and repeat.
Yeah, I mean, I've been buying Ethereum, and I bought the ETH machine because I think that that guy may be able to figure out the best way to stake and generate income. So he's going to take a microsailor approach, bought a little bit of it. I mean, I'm actively buying Ethereum.
I also am actively buying Ethereum again and purchased a little bit of SBET.
Okay.
Because we'll see. We'll see. I think that they could potentially copy a MicroStrategy-esque approach, and they're staking.
Yes.
I think it's one of those things that it's like there's not as much of a fixed supply as Bitcoin, but I do like the fact that they can actually generate income. And if they can get to such a leveraged amount of Ethereum that their take on the actual coins might be make investors pretty happy.
You know what I think is crazy? How much hate Chris Patel got for his Palantir tweet tonight.
What did he tweet? I didn't even see it.
Just that about the valuation. Like, it's crazy.
I think people can get caught up in a run, like especially whenever SoFi went from 10 to 20, that people went, oh, next stop, 40, next stop 80, next stop. Like, just because something ran doesn't mean that that's the new trajectory.
Well, here's where I have a problem with Palantir. Okay, and keep in mind, for people who don't know, if you look at my public history, I was writing articles about Palantir when it was $10. Like, I bought my first block of shares under $10. Like, I've been a Palantir bull since the direct listing. And as a company, I'm still very bullish on the company going forward from a business aspect. But right now, for them to be pushing $400 billion in market cap, I mean, in all seriousness, they're a $375 billion market cap company. And they don't even do $1 billion in net income. Like, let's really think about that for a minute. 375 billion market cap, they don't even do $1 billion in net income. And based on the growth trajectory that we've seen, they may not even generate as much net income as Cisco can generate in 1 year over the next 5 or 7 years, yet their market cap is 100 billion more. Like, it just does it from a business aspect. It does not make any sense. And people are paying right now 273 times earnings for a company that has less EPS growth on the horizon than Tesla, and Tesla's trading at like 150 times or 160 times. It's insanity.
I don't know, man. I've honestly like
Tanner, look at this.
There's no stopping them.
Like, I'm sorry, but it's trading at such a higher valuation than Tesla with less forward EPS growth. Like, at some point, we have to call a spade a spade. When you make an investment in a company,
so highlight where people should be looking. Highlight where people should be looking right now.
I just did.
No, I know, but you're talking about forward earnings. So highlight that part of Palantir's thing. Okay.
So when you make an investment in a company, you're paying the present value for all of its future cash flow that it is going to generate. Generating revenue and generating profitability are two very different things. Completely different. At this point, think about this. I can't believe I'm going to freaking say this, but I'm going to say it. I got to make this a little bigger for you. So you can see the whole thing. Based on the current free cash flow, if somebody was to acquire Palantir, okay, just based on the current free cash flow, it would take 282 years to generate the market cap from free cash flow.
Assuming
Even
they
if
don't grow.
Grew by 20% a year, this is still a bad investment on free cash flow. Like, at some point, we have to say, this is an amazing company that got caught up in a mania, and the valuation is broken. It's just straight broken. Like, why on earth? And if people want, and the reason I put the cash from operations yield, is because I know people can say, well, the cash from operations yield's over 40%. If they keep growing how they're growing, cool. Meta's is 56%. Like, at some point, and their valuation is 35 times free cash flow with a much higher cash from ops yield. It's just, at what point do we call a spade a spade?
Well, that's honestly why I very much like where Nvidia is still today. If you go back, if you go back to your other, there.
I love where Nvidia is. I'll pay 26 times 2027 earnings all day long for 60% EPS growth, all day long.
Yeah, they're unbelievably cheap. Like, yeah. Still, I think it's hard to fault the Palantir community. I mean, they've done unbelievably, especially for people. What?
They've done unbelievable. And yeah. I mean, Palantir was not an easy investment because a lot of people were calling it a black box. A lot of people didn't understand it. There was a lot of misinformation out there. Everybody who was in it deserves the rewards. All I'm saying is, it is so overvalued on the market cap. Are we really going to say that this is going to get to a $500 billion company? Like, Palantir is bigger than Bank of America right now. Think about that.
Yeah. The right crowd.
I'm just saying, it's bigger than Bank of America.
Yes. Yeah.
Like, how are we going to let that slide?
Yeah. No, I agree, man. I agree. But I don't know. I'm not really caring too much about the overvalued names these days. I'm so focused on the ones that I just think have not run as much, which I think, like you said, is Google, Amazon, Nvidia to some extent, and some smaller names as well.
I mean, I'm shocked at how Broadcom has become like the 6th biggest company in the market.
Why? You don't like Broadcom?
Love Broadcom. I just can't believe how they've absolutely destroyed it. Like, you look at their return on capital, it's crazy. It's crazy.
Nvidia hasn't run. I mean, honestly, whenever you look at this price today for how much they're expected to grow, it's still super cheap. So that's the problem too, is people just look at a run and they see a company go up or like they double, but
you got to go to the financials. I've never seen, and I studied this, I've never seen a company do what NVIDIA's did.
Ever in history.
Ever in history.
Like, that is the problem is,
I mean, think about this, guys. They did 4.4 billion in net income in 2023. Then they did 30 billion in 2024, or I'm sorry, they end their year in January. So really 2022, they did 4.4. 2023, they did 30 billion. And last year, they did $73 billion. Think about that. They more than doubled their net income last year. It's insane.
Someone said add a PEG ratio to your column to really see, but I don't think that does NVIDIA
justice.
Doesn't do Palantir any justice. Sorry.
No.
Like, their PEG ratio is 7.9. 7.9.
If you were to model it out, and I could do it right now and break hearts. I really don't want to, though.
On July 25th, it supposedly was 21 times.
If you give Palantir a 40% revenue growth rate over the next 10 years, and you keep their I'll just freaking do it. I'm going to piss a lot of people off right now.
Yeah, which I'm not trying to do. Someone said to look at the PEG ratio as if it does them favors, but honestly, I don't think it does.
No, it doesn't.
Here are just a couple names of PEG ratios for, and look at the bottom one. It's not even Google. The cheapest PEG ratio on the list that I have here, which is just a couple selected names, is NVIDIA. You know, that's why I even at a $4.3 trillion, price, NVIDIA's cheap.
Oh, I agree with that. 100%.
But also, if there is momentum there and people want to bring it up to 170, 180, hey, more power to you. But I don't think even the biggest of the bullish analysts, like the Dan Ives, will tell you that Palantir is cheap.
Everybody was look. I happen to like Dan Ives a lot. Okay, a lot. Everybody was making fun of him for saying 75 was his bull case. Palantir has shattered the bull case. Completely shattered it.
Agreed.
Oh, this model is going to piss people off, Tanner.
I'm afraid to sell Palantir. I wish I had more. You don't have to. These are your. If you sleep well at night holding
don't
Palantir,
listen to me.
Yeah,
do not listen to me.
If you sleep well at night and you have a long-term perspective on the business, there's a great chance that they continue to grow over time. I mean, I don't think Palantir has competitors, but
I mean, they do, but competitors aren't really that good.
Yeah, that can stand their ground against them. I don't know.
Yeah.
But yeah.
All right. So this is not going to be pretty. I'm going to try to clean it up just a little bit.
Yeah, I think that's why Palantir was a little bit or had a lot of volatility today, was that the defense is exploring other AIs to reduce reliance on Palantir. However, I actually do agree with Amit. That's very much a bull case, in my opinion, because that's the same thing that bears tried to say about NVIDIA, is that every single company was trying to look for custom silicon solutions, other companies, to try to reduce their reliance on NVIDIA. But the truth is, if you have to do that, that means you have an unbelievable product. And most times, even with a ton of competition, if you can stand your ground, which Palantir might be able to do, that just proves how good your product is. So I don't think of that as a bear case.
No, why would that be a bear case?
Well, I could say how it could be. They reduce their contract sizes with Palantir or something, but yeah. My average on Palantir is 47. I'm still buying. I've averaged up from 7. Hey, all power to you. I'm not trying to, or I don't even think Steven is trying to. He's just saying his own case. We're all individual investors. This is a market, right? So for every buyer, there needs to be a seller. That's just the way the market works.
Let me see how this looks on the stream.
Zoom.
I can't believe it's so big on my freaking screen.
And get a smaller monitor.
Oops. So just based on Palantir's current market cap, assuming that they do a 40% growth rate every year on revenue, and they keep the same free cash flow margin at 42.5%, their free cash flow would be in 2030 9.1 billion. They're still trading at 41 times free cash flow in 2030, assuming that they can grow 40% every year.
That's if the stock price stays the same?
That's if the market cap was to stay the same, yes.
Yeah.
And that's my biggest thing. There is so much growth already priced into it that you have to wait for so long. And once again,
are they
assuming they can maintain a 40% growth rate?
Are they still diluting right now?
Of course they are.
So you're using market cap, so the stock price would actually go down over time.
And keep in mind, they're diluting shareholders, and they continue to dilute shareholders to add cash to the balance sheet to generate interest income. Their interest income was 36%, I believe, in Q4, and close to 40% last year, I believe. I could be wrong. I could do the math really quick. Palantir last year did, where's interest income? 197 million in interest income last year, and they did 462 million in net income. So I don't know, that's like 42%, 43% right there is interest income. In a world where the Fed is lowering rates, they're not going to generate as much unless they keep diluting shareholders and add cash to the balance sheet. So they're going to have a tougher comp if interest rates decline.
Yeah.
I mean, their EBITDA, and keep in mind, this is not good. EBITDA should be more than net income. All right? EBITDA was 342 million last year. In the trailing 12, it's 435 million. It's just insane what we're paying for it. That's all.
Do you know that you're the most depressing guy to listen to when you talk about stocks? I think that Steve really much values the numbers, which I think a lot of investors should value the numbers.
I think more people should actually look at the numbers instead of a chart.
Well, I think if you did that, you would have missed a rally that had gone to $160, which I missed because at 20 it looked expensive.
And it looks even more expensive now.
No, I know, but I missed out on an 8x because of that. So at the end of the day, the people who actually bought and held it while it's gone up were right, and the fundamental investors to this point have been wrong.
100%.
So, Steve's just sharing his perspective, and I think in a lot of retail, especially like different areas, like depending on the channels that you follow or areas that you like to invest in, that you might not look at it the same way as Steve. So I think the added perspective is nice. You don't have to agree with them.
Yeah, but look, I'm just presenting the numbers. Like, I'm not making up what Palantir's doing. I'm speculating on them being able to hold a 40% growth rate and what that model would look like. But the data is the data. And right now, it's one of the most expensive stocks in the market. It's a top 20 company by market cap, or a top 22 company by market cap. And there's a lot of companies that are way more profitable that have a smaller market cap. Look at UNH. UNH is under $300 billion, and they do over $25 billion in free cash flow.
So you'd pick UNH over Palantir?
I'm not saying I would pick UNH over Palantir. I just find it very interesting that we can honestly put a valuation on a company that's doing $25 billion in free cash flow versus a company that's doing $1 billion in free cash flow, and have the company that's doing $1 billion be worth significantly more. I just think from a business aspect, it's crazy. So,
last thoughts from you, because I got to wrap up in the next 5 minutes. And then we are actually doing another show tonight for Robinhood and SoFi and everything with Amit and Roy. So that'll be exciting. But I'm going to try to squeeze dinner in between those two periods. What are your final thoughts before tomorrow? Are you bullish SoFi? Are you bearish? What can we take away? What is your gut feel that the market will do?
I think you got a good setup for tomorrow. You're going to head into a lower rate environment. I think Noto's going to talk about that. You're going to see student loan growth come. Originations are going to go up. Let's not forget they bought Wyndham. That hasn't really helped, but in a lower rate environment, that's going to do really good. I mean, the housing market getting unlocked is going to be very strong. I think it's a really good setup. What I am looking at is different than other people. So I'm going to take it just from a market perspective. I think if you get a triple beat again, SoFi goes up. And I don't think the tech side really matters that much to anybody other than me.
I think that's fair. I've honestly kind of written off the tech platform, and if it does well, great. But it's just added It's a cherry on top for what is a financial services and lending neobank for me. That's cheap.
SoFi has not given anybody a reason to be bearish. It continues to beat numbers. They continue to raise guidance. They continue to expand margins. Like, what's the bear case? Like, I'm not bearish on SoFi. I'm just looking at it from a different aspect because I'm more interested in something else. But that doesn't mean that it's going to go down.
Someone clip that, cut out all the back end stuff. Just say SoFi. What is the bear case? He doesn't see it. Clip it and ship it. I need that next time Steve starts to turn a little bearish in his comments towards SoFi.
I'm just going to say one thing real quick because they keep asking. I'm not in UNH. I'm too scared of it, UNH, because there's too many variables that I can't model out or understand. And there's just too many moving parts with what may or may not happen over the next 6 to 12 months. It looks from a numbers aspect very interesting, but things can get worse before they get better. It could be a very easy run to 500, but it could go down. I'm not in it. And I'm not planning on starting a position.
Do you have any faith, before you go, in my community's portfolio here? Tell me what you think. So far, we're down 9%, started on July 8th.
Can you actually show me the positions, not in a heat map?
Yeah, here. So these are ranked in order. Cash, don't worry about that. That's just that's like actually my money to sit in there to actually buy the positions whenever they come in. But this is all based on their recommendations. Each individual that ends up donating.
Why would you buy Rivian?
Because someone donated for me to buy Rivian. So it's actually their donation that's funded every single position.
Real quick, best bet, I guess, because of Ethereum. SoFi, yes. UNH, it could be a good play. Love PayPal. Hoods up. ABCL, I don't know anything about. Rivian I would not be in it. Lumen, I would not be in it. ASTS, I think, has gone too far. Don't know what IBRX is. Clover, I don't know anything about. I happen to like Oscar. I happen to like Marvell. I think Cloudflare is grossly overvalued. Nimbus, I don't know too much about. Kim's is interesting. NVIDIA, you can't get enough of. Shop should be okay. Shark Ninjas, I need to do some more research, but that is
careful what you say there.
I know you love them. CRISPR, I think CRISPR is the future, but that's just me. I'm not in it, but I think CRISPR is the future, especially with AI. I think we're going to see a lot in gene editing over the next 2 years. Neo, is that the freaking car company?
Yeah.
Get out of here! Come on.
Chinese car company.
But BYD is the one to buy, not Neo. VST, that's a cooling company?
Vistra Energy, yeah.
Yeah, that's probably not that bad. Ooh, where'd you buy Hasbro? I actually wrote a bullish article on Hasbro when it was in the 50s.
Wait, hold on. Let me turn it to total. So this is actually what we're down. Our biggest position, we're down 44% on.
Jesus.
But Hasbro, we're only up 1%.
Yeah, I mean, Hasbro ran. Dude, LNG, whoever recommended that is awesome. Liquefied natural gas is the future. People are sleeping. Or go Honeywell, Pfizer. You have a dividend stock. It's paying you 7%. I'm so proud of you.
I didn't pick it. These are the viewers.
I happen to like Pfizer here a lot. I really do. Dude, who recommended QXO? Who recommended a Brad Jacobs company to you?
I could find it for you.
Do you even know who Brad Jacobs is?
Maybe not.
Brad Jacobs is a big-time CEO who has made a career of acquiring similar companies and building out tremendous infrastructure. QXO can do really well. They just
this was from a user on July 8th. So we've held it from since July 8th, called Rexy Roller. Rexy Roller put that in the portfolio.
QXO is interesting. I don't like Quantum. Joby, get out of here.
And so we're up 47%. It's one of the biggest winners here.
Get out of here.
What about Honeywell or?
I like 3M better than Honeywell.
Okay, Palantir.
Yeah, I mean, Grab, Bowl, This portfolio's all over the place.
Bro, it's not crafted. It's any donation.
No,
We have like
I get
70 positions, bro.
I get it.
Kratos.
I actually like Alibaba here. I do not like ARM here.
ARM?
No.
Oh, they report in a couple days?
Yeah, their valuation's very stretched.
Chime, Rocket.
I don't know any of these. JP Morgan, I like Pepsi here. Love Google here.
Yeah, me too. Amazon.
Love Amazon here. I like
these
Uber
are like our
here.
60th biggest positions. No one is actually donating these. Like the donated ones are ABCL, Hood, SoFi, SBET, UNH, PayPal. Like those are the big ones. Yeah. So we're down in the 60s here. Okay? This is where we start getting Google and Amazon.
Yeah, you need to get more of those. Sentinel One's interesting.
Uber, Accenture.
Starbucks is down because I'm not drinking coffee anymore.
Oh, I'm picking up the slack.
I used to go there like twice a day.
Okay. Mercado Libre, BlackBerry, Lemonade.
I mean, BlackBerry, really?
We got donated WD-40.
So I actually did a lot of research on QuantumScape. I still need to have some engineers look at it that I know. It's a very interesting company, but it's kind of not, I don't know. Their whole solid state battery stuff, I really wish was sooner.
SoundHound, CoreWeave, Micron.
I think Micron's going to be a killer. I think Micron's going to do really well.
Rocket Lab?
Space doesn't excite me.
Those are our positions. 80 positions here.
Dude, I like it. Your portfolio is looking like mine.
Honestly, though, I think we might have hit a cap, though, because I also thought we had Grab in here as well, but I know that was our small...
there. I saw it.
Oh, wow. Okay, so maybe someone else put in Grab and it jumped up the list. 80 names. Well, 79 names because cash, but crazy. This is your guys' fault.
You're a good role model.
Yeah, I tried to tell them to, no dinner for Tanner. Okay, so ladies and gentlemen, in the next 10 minutes or 9 minutes, 8 minutes now, we're going live again on this channel for Robinhood. Well, it used to be Robinhood Weekly.
You can't say that anymore. Don't say it.
Yep.
Don't say it.
What is it now? Tech Bros Weekly. Look out for that. That's going to be very exciting.
Does Roy still hate Google?
What?
Does Roy still hate Google?
Yeah, he had a lot of bad things to say last time I talked to him after earnings.
Really?
Yeah, he's not very positive on it right now. He thinks that...
dude, I want to talk to him about their earnings.
We'll see if, Amit will send you a link and then you can come talk with Roy. But dude,
you said it's going to be on this channel. Send me a link.
I will, but Amit's hosting it. So, but yeah, I will get that for you. And then, but I really have to go because I'm going to go eat really quick.
Right.
So I got a couple minutes to go eat. Ladies and gentlemen,
you're a good role model.
Thank you all so much for watching. Really do appreciate your time. Make sure you hit the subscribe button down below if you haven't done that already. Make sure you check out Steve's Seeking Alpha articles, Steven Fiorillo at Seeking Alpha, or at Dividend Streams on X. Anything else you want to shout out?
No.
Awesome, man. Thank you so much for being here. I really do appreciate it.
Yeah.
Bye, guys.
Later.